Now, everything in your trading journey does not matter at all unless if you know how to read price and technical analysis correctly. And if you don't, you will simply not make money at all. But guess what? I'm here to change everything for you. What's up, everybody? What's up, happy people? This is BGFX Legend, and I've been trading for more than 10 years. And today we are diving into a massive GBPJPY trade breakdown. I'm talking precision entries, high probability concepts, and the exact strategic framework behind trades like this, and this. And these are the same concepts that have helped traders around me level up their game, hit six-figure and multi-figure years, and build serious consistency in the markets. And if you are ready to see how we took this trade, let's get into this. All right, guys, so we are looking at GBPJPY on the 3-monthly time frame. And one of the things that I like to do is, before I scale down to lower time frames, I want to know what is happening on the higher time frames, and I also want to try and align myself and align my trades with the trades of the big guys. So right now what we can see is, we can see that we had a double bottom here. We also had a W pattern here, and all these patterns of rally, they ended up actually taking out this high, creating a massive double bottom, and the neckline was supposed to be around this 196048 price level. And we can also see that soon after breaking out of this high, we can see that we had a rally base rally demand level, and with precision you can see that the market came to touch somewhere around this level, but that's not where I want to put my focus on, right? So currently we can also see that, we can also interpret and see that for the past 1, 2, 3 by 4, like we can say 12 months, in a way the market has been in a range on the higher time frame, but eventually we can see that buyers took out this price level or this high point, right? So we can now go on to the 2-month time frame, and we can see this is the same data that we see now. We go on to the monthly time frame. So what I can do is I can just wipe off everything that I'm looking at right now, and what I can also see is that if we are to look at this price action, we can see that we had a rally base rally, extreme demand zone, and it also had a failed buyer zone, a failed supply zone here that we smashed, and then the market came back again. Now we took out this high point right around here, and we can also see that currently we are actually approaching this price level. But now let's look at what it is that led me to want to purchase or to buy from this this market. Now we can see that previously we had a rejection, a doji, and then we had like a pin bar, and then out of that pin bar we took out this high point. You can call this monthly high point that was taken out, and then the market sort of after closing we came back again to dip into this level, and then we ended up having this price high, or you can call this monthly high. This is where I want to just mark and put an annotation, right? Now, after having this monthly zone, we also have this high point, which we can call this monthly high again, or you can call this the 3-monthly high again. Now, these are the zones that I'm watching out for, and I know that soon after this bullish candle close, normally when a new candle closes, the market likes to come back a little bit or to retrace a little bit, just to push a little bit below, and then before it pushes up again. And that is exactly what happened. So if I scale down to the before I scale down, by the way, right now if I'm looking at the monthly time frame, just by looking at the candle, it flipped, right? It tapped this support zone, this monthly zone, the previous resistance point, and then flipped bullish, right? So already, according to what I'm seeing, the interpretation of the sentiment is that buyers are very much strong in the market. The market is pushing to the upside. So now if I push on, scale down to the weekly time frame, that's where again I'm looking at price levels and I'm seeing the sentiment again. We are still bullish. Now scaling down to the daily time frame, this is where I start doing everything, right? So now what I saw is that the market has been bullish, and we see that we actually took out a high price point right here. I think I can actually remove everything here. We actually took out this high point, and then we had a very strong push or a momentum push, or we had large and huge momentum candles to the upside, right? And then soon after that, the market started correcting, and it was in a corrective push, loss of momentum to the downside, obviously to look out for a buyer zone, right? In this case, you can also see we had a very huge gap here, which is also one of the things that you can look out for. And we also had a very strong zone here. And if you are a student of the Fibonacci 2, you can also see, if we pull out the Fibonacci 2, you can also see that the market touched somewhere around 0.65 or 61.8 before flipping to the upside. And obviously with precision, you can actually time this entry. So after that, we can also see that we broke out of this resistance level. This is where I want to focus on. This is where I want us to focus on. Now, when we are interpreting this price, I want you to focus on the behavior of price. Here we had 1, 2, 3 bullish candles, very strong, and then immediately we had a very strong engulfing, which is a very strong rejection or very strong selling or buying reversal candle. Now, what happened is that after that, the market then took out this price level to the upside, and we can actually see that now we can actually see that this engulfing zone was actually eliminated, or it was taken out, right? Just think about it this way. A very strong level that sellers are looking at, they are actually holding, they've been holding for some time. You can see that by the strong momentum and also the formation of an engulfing candlestick pattern. Now that level has been taken out. What does it mean? It means there is high probability that the market is going to push to the upside. Again, we can also see upon retest, the market also created a bearish engulfing candle to sell. And I know many people were trapped. They tried to sell this market. But guess what? The market again flipped or failed this zone again to the upside. When I saw this, right, on the daily time frame, I saw that also now. We are still bullish. Remember the sentiment, right? We are creating higher highs and higher lows, and the market is showing me signs of bullishness. Now, when I see this, when the market is retracing, I know, remember, the market does a few things. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Like the market moves in a very simple pattern, but you need to understand where you are in the market before you can actually place a trade. So now what I saw is, upon retesting, we saw that we had a very strong rally-based rally, also a very strong leg out, which was in the form of an engulf level. Now we have this level, okay? So if we scale down to the H4 time frame, you will start to see now what is happening. So the market bought from this level, but before then, I want you to pay attention to something. Though we had a weak rejection high point here, we also had a strong support level or a market baseline somewhere around here. This is something I teach. Sometimes the market might not test these highs or come back to these highs, but it will come to the closing of or the body of candles. Now, the market comes back inside, taps this zone, push up, comes back to that. Now, I want you to pay attention to something. We had price formulating or creating a level somewhere around here, right? Somewhere around here. I think I'm trying to push. There we go. Something like this. There we go. So we had a resistance point here. We had a resistance point here. We had a resistance point here. And then price found support, tried to buy. Pushed inside. Buyers took over. Comes back again, taps again for the second time. And I know for a fact that this level wants to hold. Now, when you look at this, another way of interpreting this is that if you are a student of patterns, and also trying to see what price is doing. You will see that this was a support level. Price sort of faked out, went below slightly to this level to buy, and then comes back to find support or to find buyers again. Remember, above this line, you'll find out that buyers are much more stronger, right? So when price comes back again to the buyers level to tap again, we can see that the market was now ready to push to the upside. So we can see the evidence of an engulfing. Again, we are not buying, right? But what we want to do is, there's something that I like to do before I can buy. I want to see the momentum of price dying. How do I see that? There are so many ways to look at that. You can also see that using patterns, or you can also see that through the behavior of price. I want to see, in most cases, I want to see a trend or price coming back to that level in sort of like a corrective pattern, right? So in this case, we can see that the market comes back. We had a momentum or a trend line to the downside that price was supporting, and then eventually buyers took over or got out of this. So someone might actually interpret this and say, I want to buy and put my stop loss this, but I said, no, let's wait. We are not going to do that. But instead, what we can do now, this is where I'm now refining, because usually the 4-hour time frame is the time frame at which I'm now looking at to place trades and also scale down to lower time frames if I want to refine. Now, the other thing I see is that we had a low point, right? And that low point was swept by price, and the market comes back with an engulfing candlestick pattern, right? And this is showing me signs that buyers are interested to buy in this market. And the engulfing candle is a very strong candlestick pattern, especially around the higher time frames, 4-hour time frame, the daily, and so forth. Now, after the breakout, I know for a fact that the market likes to come back to the level that led to the breakout of that zone. In this case, it was this demand zone, right? Now, when the market is coming back, that's when I'll scale down to the H1 or the M30 time frame. In this case, I was just on the H1 time frame. Again, if I want to sell, I need to see again price coming back to my zone, losing momentum or in a corrective way. In this case, we can actually see that we had this lower point, lower point, right? Now, I had strong bearish candles to tap this zone. Again, I'm not buying. I need to see a sign of weakness. The first sign of weakness, we need to exit this momentum or this trend line. And we can see that we exited this trend line with this bullish candle, right? And then once we exit this bullish market, or once we exit this point, you can either buy or you can wait for the market to come and tap the zone that led to the this being formed. So in this case, the zone that led to the formation of the breakout of this was just this demand zone. So you can just, soon after, you can buy or you can just wait for the market to tap this zone. And the other thing I like to do is I can mark this with a gun box just to see if the market is gonna tap my zones. And I've got like a 0.25 zone, a 0.25 level right here. So we can see soon after the close, you can buy or you can put a limit order right here. So in this case, what I did was I did not have time to use limit orders. So what I did was just immediately I saw this setup as I was marking charts, but then when it was forming, I did not have time to actually set a limit order to buy. So what I did was I just placed a buy slightly somewhere around here, and then I put my stop loss just below. So now remember, as soon as I buy, what I want to do is I want to see price taking out a high, what I like to call a breaking point. Now, this is a decision-making point. If the market really wants to buy, it will actually take out this level. This is not a level for you to put your price on break-even. It's just for you to place a buy and then watch. If the market breaks out now, there is high probability that we might see the market maybe retesting this level and creating higher highs and so forth before you can put a break even. So right now, the market is still somewhere around here, right? Somewhere around here, and already we have secured. So another thing I like to do is I like to secure some profits somewhere around 1s to 3, depending on also what the market is doing. Now, let's go back to the monthly time frame or the weekly time frame, I want you guys to watch something. Remember, we had a high point that we are targeting, right? Now let's go back to the H1, or we can go back to the H4 time frame. So this trade is most likely going to push and give us a 1s to 7 as your first TP, if you may. I might scale down. I've actually scaled down some position at 1s to 3 just to take some profits, but I might take out a big position somewhere around here, and then if the market allows, or if the market wants to push price, one thing that I also like to do is I like to use the Fibonacci tool as my take profits as well. So if I push, I'm just going to mark, if I mark this swing point to this swing point, you realize that I have these levels, 0.27, close to where I have that monthly high. And then we have negative 0.618, which is somewhere around here. Again, this is most likely going to give us a 1s to 16 risk to reward ratio. This is actually a sniper entry. And like I always tell people, you need to be patient in the market. You need also to be realistic with your goals. And also, if you are patient enough, the market is going to pay you. Think about it this way. I always like to do this math. This is a potential of 14%, right? Up to this 0.618. Now, think about it this way. This is a risk to reward ratio of 14% if you are able to wait, right? 1 to 14. Now, assuming that you have an account of $100, like I try to keep it as realistic as possible, an account of $100, right? $100. Let's assume that you're trying to risk a conservative amount of like $20, because this is already a small account. So what we are going to do is we are going to say that $20 multiplied by 14%, or 1 to 14. And when you do your math, correctly, you are going to see that this is a powerful trade that will change your life. 20 times 14, that is $280. You know, I did a challenge where I challenged people and I said, if you have never seen a floating profit, you've never seen a floating balance in your account, it is high time that you step back and look at the way you're trading. You know, scalping is exciting. It's really good, but many people blow accounts when they're scalping. I love to scalp. I also scalp, but trust me, if you really want to see money and if you are patient enough, swing trading is the way to go. That's $220 in your account. So assuming you are trading a prop firm account, right, of 100,000, and you risk 0.5% of the account. 0.5% of the account, it's what? It's $500. Now, if we multiply $500 by 14, that's times 14. We are talking about a huge sum of money. We are talking about $7,000. And this is an amount that you are making with one trade. You place a trade, you fold your hands, you go do other things, you go invest your time in other things and let the market print for you. So ladies and gentlemen, if you love this kind of content, make sure you click the like button, and if you are new in this channel, make sure you subscribe as well, and click the notification bell so that each and every time I do an upload, I do another video, you will be notified. And also, I'd love you to leave a comment below and let me know if you are really excited and if you love this kind of content, if you love this chart breakdown videos, and I'll be happy. And also, if you're looking for mentorship and trading guidance, I also do and give people a free consultation call just to look at your trading journey, your trading strategy, and what you've been doing, and see how I can help you. So ladies and gentlemen, I hope you enjoyed this video. BGFX legend, until the next one, a peace.